If you've been waiting to buy a new car, hoping to get a better deal, you may be disappointed. Automakers Ford, Chrysler, and General Motors are pulling incentives for their vehicles. It's a healthy sign for the auto companies. Bloomberg's reporter Keith Naughton joins us from our bureau in the Motor City. Keith, thanks for joining us. Car prices up an average of $2,000 since last year. How is this possible in the worst recession since the Great Depression?
Yeah, it is counterintuitive. You'd expect there to be great deals out there right now to move the metal. But in fact, what the automakers have done is they've pulled their inventories way down. So they don't have the pressure to put big discounts on their cars to move them. And that's allowed them to raise prices by, as you said, $2,000 since last year. It's a 7.8% increase.
But Keith, why is Detroit cutting incentives? Didn't they invent them?
They did invent them. You might remember, if you've been around long enough, Joe Garagiola back in the 1970s saying, buy a car, get a check for Chrysler. They did pioneer this, but it also became their undoing in some ways because they would keep corroding profits by putting big discounts on their cars. They finally realized, as the Japanese learned many years ago, the best thing to do is rein in inventory, not have such a large supply, then you don't have to go to the big, deep discounts to keep the metal moving.
Well, why won't the incentives blow back up if car buyers just wait long enough?
Well, this is going to be a real test for the automakers' resolve on this issue of trying to keep incentives and inventory down, because we do still have a very bad car market right now. Things have really dropped off since the Cash for Clunkers program ended in August. So they're trying to hold the line here. It'll be a big test of whether or not they can do it going forward.
Keith, how's inventory control played a role in boosting car prices?
Well, it's the old supply and demand law here. Ford, for example, cut inventories in half from the beginning of the year. That allowed them to boost prices on their cars by $2,000 per vehicle. That added $900 million to their net pricing in the second quarter. So as long as they can keep those inventories low, which Cash for Clunkers helped with as well, then they can keep prices in check.
Well, I guess it's the $2,000 question, if you will. Will car makers or the government offer consumers another Cash for Clunkers deal?
Consumers would love that. The ones I spoke to certainly feel like there should be better deals right now, given the economy.
Did they feel like did they feel the Clunkers program ended too soon?
Well, they want more of it. Certainly, the ones I talked to said that you know, cars should be cheap right now, and they're not. Clunkers was a hugely popular program. It sold almost 1 million vehicles.
Right.
But the government and the auto companies in particular don't have an endless supply of discounts to offer, so it doesn't look like we'll see Clunkers coming back anytime soon.
Bloomberg's Keith Naughton joining us this afternoon from Detroit. Keith, thanks.